Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it's now the 2nd of September, 2025. I hope you got an awesome long weekend and a great Labor Day. Yesterday, we were here kind of giving you a brief outline of where we thought it, not brief, it was probably like an hour or so. I outlined where the markets come from and where I think it's going. And if you were here and caught the bias and how it was formed, and I kind of went through a kind of lengthy explanation as to where I saw the market kind of going. You'd be in on this nice little run lower. We're calling it to go lower. We're looking for a little break above this level. We were talking about this level here on the 15-minute chart that we were keeping an eye on. If it broke above that, then we look to see it coming higher into this range. So the key level was we were talking about seeing this candle have a fair value gap above it, and then we want to see that fair value gap either stay open, trade back into it, and go higher. And the mean threshold of that candle was the line in the sand. So as you saw, there's a fair value gap that formed. We went higher, took out the highs. That was all it was. Quickly dropped back down, popped up higher above it, did one more run above the highs with a wick, and then we went back through this mean, that would make this mean threshold and this mean threshold. Went through one, came back to that, tapped it, went lower, took out this one. So now all of a sudden you got to say, as soon as these three candles here, we have a change in the state of delivery, as Michael would call this, all three candles here. As soon as that part right there breaks, we have a change in the state of delivery. We come back inside that, perfectly enter it here, and then go short. Takes out this city on the downside. And we want to say, if it returns into this area, that's good enough for a continuation on the short. If we break that area on a high, I'm on the wrong side of it, so draw it across. See how we go through it? We come all the way back up inside it right here, then roll over and go lower. And we come back up inside this thing to one up from trade entry reversal. Retap in the old low right there, or this breaker. We tap the breaker again, roll over, and continue going lower. And then we've just exited big time. My overall objective on the daily was to see it get down into this 4-hour block. The weekly, we want to see it get down into here, which is this weekly consequent encroachment, or the monthly consequent encroachment, the wick. That's the midpoint of that wick on the monthly. So we're heading for there, and then eventually seeing if we can run into these rejection block, with this rejection block down here, and run down even deeper still. Okay, we've already come up into the premium, so the discount weekly would be in here. It would be like the ultimate, my weekly downside objective would be this box right here. So 22,260, 22,250. Take out those lows, come into this BISI, and we'll see how we attack this BISI and this monthly fair value gap. So next objective, lows or rejection block, old lows, this big box right here, and then the monthly fair value gap. Let's see if we can start digging into that. And eventually I'm looking for a box to box on the weekly. How's that? Crazy. So I think we've created our little peak here. We got to get a market structure break. To get all this happening, we got to get a market structure break We've eaten through the mean threshold this one more time, which is great. And I'll start aiming for the lows, find some support at that, and start digging into these higher time frame objectives. This might be just the September drop and then the October run up, because this is not typical of the markets. The markets usually make a run up in September, then a drop down in October, and then you look for your October reversal. So slightly low in July. Then you should see another low in August, which would be right here, I guess. And now we're looking for a run up in September. But this has been uncharacteristically bullish since May. So anyway, that's what my objectives are. So daily, we're aiming for right here, equal, these relative equal those below us, and then the rejection block. That's where we go. Let's make sure we're all live here. There we go. So where can we capture this run this morning? So let's look at the hourly. Good morning, Hadi. Joe Matt, good morning. Chris, good morning. How you doing? Yes, I had my fun mornings at the dentist last week. Yes, indeed. Looks like we're pulling lower into these relative equal lows on the daily. Yes, indeed. That's where we're headed. Breaker. Breaking structure. Return back into the breaker. Head lower. Is that an institutional order flow entry drill there? Nope. Quite. Pretty close. So we're just waiting for any chance to catch a small reversal, or for something to form in here that we can get reconnected with. So we're just looking for any opportunity to see a reversal. If you're still in this from last night, I think I only caught this as a brief run down there last night. Yeah, I think I only caught it into here. Just 3, 4, 1. I think I caught it somewhere in here and went just to this civvy. And as you can see, we broke through the civvy on the downside. There's your first hint that we're going lower. You trade back into it right here. This whole thing becomes fair game to trade into. It trades into it. And we go lower. That would have been a nice little 3:30 in the morning London grab right there. No, that would have been Asia session, I think. Yeah. No, it's London. Yeah. Trade back into London and then just start booking it lower. Sorry, right here. It is London session. Right there. Right at lunchtime, like mid-London session. That's a nice little enter right there for a short. If you're awake. Anyway, let's get to, we're just starting our 650 macro now. So you see how we've got these relative equal lows here. Trade through them. You come back into them right here, and wick to wick, body to wick. So those little wicks just came back, tap this one inside this level, drop through right there, another close. So we close below it here, and then you think, okay, I want to see it just come back up inside this and tap it. And then you go, well, I got to give it this room here. So you can see the wiggle room there. Trade right back through it. Literally on the close, came back, tap it one more time, went lower. I'll be looking somewhere down in here. Look right there for now. New day opening gaps. Equal lows below us here. $64.66. $64.55. Got this level right here. Let's go to a 4 hour here. Start from here. So if we break this structure right here, look for this level down here at 64. And we're just coming back to fill this little imbalance here at 64.64. To 64.57. And then you're looking for a change in direction. And run back up into this candle. Otherwise, if we have a deeper retracement into here, if we take this out here, look for a much deeper retracement back into this breaker, and then this volume imbalance right here on the 4 hour for oil. Let's go natural gas. A long little loogie. I like to see that. I don't know why natural gas itself is heading lower, unless these guys have gapped down that I haven't seen something. It's August 29th. Let's just come back and fill this gap again. I'd like to have seen 1294, but oh, here we are. That's the pre-market right now, 1222. So we're gapping way down here. We have this gap below us and relative equal lows. This was the call on Bitcoin yesterday. Expected a retracement. So looking for a drop below this level. We did. Came back up into this level right here. And then we rolled over, went lower into these areas. And I talked about whether or not if we broke through them on a close, we'd be going lower for these equal lows. And if we don't, then we get a reversal. You're looking for this level right here, which hadn't formed just yet. But now that you can see it, you can see how it broke above this premium box. Back inside it, went higher, took the highs, took this other little premium box and went straight for the highs. Main threshold, holding price. The body is respecting the main threshold. Now all of a sudden you've got a change in direction. So now you're looking to see this provide some support. And we haven't had a revisit of this level yet either. So if we get a push, we may get a big deep push all the way through just to tap this low of the premium box here, and then roll over and eat through this main threshold. We've got this main threshold kind of banging off of right now. Just tapped it, go higher. This has got to hold for us to be aggressively coming lower. We just take these two, this level and these two levels here real quick and look for a run on the lows. If it doesn't, if we just get a bounce off this BISI here and this mean threshold, watch to see this mean threshold to give way and start running back up into that BISI above you. Cold. We see this level here get taken in gold now for continuation on the downside. Let's just break this level, come back into this level, and then run for these lows before it takes this low. So I want to see, just do this tap. If we start closing above these two open and closes here, then look for it to run back up higher into that range. You could just simply come down, tap this SIBI, and then push higher to this BISI on the upside. It's a bit like box to box trade right there. So just keep your eyes on this level here. See if we just tap this and start to close above here, then look for this. If we take that one out, The next one above you is there. Come on. It would be nice to see this come down, tap this, like break through it on a body, come back through, tap it, and then hard drive lower, start taking out all this liquidity down here, and start getting back into this original consolidation for this next leg higher. It's a 5-minute chart, by the way. So just keep an eye on that. Coming into it right there. So if you're bullish in there, there's opportunity 1, 2, and 3. You want to see that hold right there. So if you're not sure and these equal lows look like they're tantalizing to you, then wait for it to break through here. If you're bullish, there's your first entry right there. Stop loss would be sitting just below the mean threshold of this because you wouldn't want to see so much as a wick get through there because there's a small little tiny imbalance down there. So if you're going bullish, look for this level above here for box to box. Little piggies, look at that. I know they've definitely reached our objective we had back in our September contract. That took us weeks to get there, but it's there. So congratulations to anybody who held pigs on that long haul we gave you back in August. We're in the middle of the sticks here in sugar. We've been there for a month now, month and a half. Live cattle, I'd wait for it to get above here first before you decide to go running for a long on this, up into this level here. So I want to see, we're already through the mean threshold, which is kind of a good thing. So if you just see a body get up here and here now and start using this as support, I'd like to see live cattle get up into 241 area. Coffee, we're back down into that discount box. Mean threshold held. Let's wait and see if we can get through this level, go for these equal lows below us, and start running lower into this range. 50% of that sitting right here. Oops. That old range, so we're up to here now. 50% is right on top of this old high. This would be like a target to aim for. If we can get through here, if I supported this, look for 13 handle rundown or contracts or whatever you want to call that. $75.90. Look for $75.90 and a bounce off of that. If we can get a bounce off of that and leave a small portion of this open and then start going lower. I like to see cocoa go lower. Look at this gap to fill. NVIDIA. That's our SIBI. We did not break above here or here. We just got to wake up into relative equal highs. And the bull trap held. Everybody wanted, even though they gave great results, great returns, everybody's expecting it to go higher. The bull trap held. And Now we're below the SIBI. So I'd like to see us get down into I'd like to see us revisit this area right here in NVIDIA. See if we can revisit this area. If we get through this area, then I'm going to look for the mean threshold of this level again on this equal low, or this low here, and then start digging into this gap again. So that's my first, second, and third objective for NVIDIA. I'm not in it, but that's what I'm looking at anyway. For me, you'd have to get back above. This is all consolidating in here. You'd have to get back above 184 on a close with a nice smart candle. Like smartly, meaning very aggressively. I'd like to see a nice smart bullish candle with a fair value gap forming above that level and a graded response as you go higher. The DAX. My boy Ali is waiting for our response to the DAX. So this is what I gave you last night, Ali. It has to stay closed above here. If it doesn't, and it didn't, it closed below it. Or, I said, or it's coming back to here. So it literally went close below, tap the line that I gave you, and then it went lower. And it went big time lower. So it came back to there, ran through that whole level, and then went lower. That was the notes I gave Ali last night. And yeah, so far our review on the weekend, which happened on Labor Day, is panning out. Disney's between the sticks, so I got nothing for there. Oh my goodness, look at this. British pound, Canadian dollar, that's just what we like to see. That's what I see. I want to see the British pound, Canadian dollar to drop like a stone. Let's get back to $1.50. Wishful thinking, I know. One of my millionaire buddies he retired at 36, a millionaire, and he in his early 30s, retired a millionaire, and he's got all his money in British. He came from England. And so this I'm sure is worth a couple of £100,000 or dollars to him. It's nothing. Drop in the bucket, Mike. Drop in the bucket. Ford, Stellantis. These guys are still down. I want to see him take out these lows here. I'm interested in Stellantis down here. I'm not interested in Ford till we get back down into the monthly level, which is like $3 away. So they're nowhere near me yet. Silver again hit our upside objective finally. Hit the carrot. So where do we expect silver to go from here? Well, the pre-market, or the next level are these two levels we got above us here. Pre-market's already up here, so we're already gapping up, which is nice. We're looking for these. Look at all these levels above us here. 41, 43, 46, and higher. So if we can get back, if we can get a little fair value gap, which we're not, we're going to get a gap up today. Come back, either fill it or leave it open, give it a little tap, and then start pushing higher. I want to see real estate really start picking up. I was kind of expecting a mid to late 2025 for real estate prices to start going higher again. So October-ish, I'm expecting to see some big drive higher in October. Good morning, Ollie. Rich risings in the morning. Good morning, everybody. 3 a.m. still happened at 3. Yes. Who is looking? Oh, the 3 a.m. candle. Yeah, your 3 a.m.'s a nice, like 3:45 was a nice little tippy tap right in here, right off that level. If you ever looked at my Tibbs mark, you'll find that that 2-3 is the key time in London for a turn. And then 4, like a 2-4 or a 3-5. And then there's 5. See 4, 5 starts right here and then goes lower. Three o'clock, look at that. Swing, 4, 5, reverse. Tibbs, it looks great too. Now I got 9. So you usually get a 9-10 turn. So there's 9 o'clock. So we should see, if we see a reversal up here, you can see a reverse till 10 and then a continuation on the downside. Or if 9:30 gives us our change in direction and we start pumping higher, look for these relative equal highs above us here. You got this order block. If we can get back above that one, look for a run higher into here. We've taken up that low. We still got those relative equal lows below us. 2303.4. We got just a little lower to go. This is our monthly consequent encroachment of the wick. That's the 25% point. If you take that monthly wick and you divide it or split it into quarters, that's the first quarter, that's the middle. We're looking for it to go lower because there is a fair value gap down there, way down. Who's looking to buy the reverse? Good morning, indices, maybe 9:30ish. Yes, capital inflow day, first of the month. I want to buy. Okay, in indices, small 63.99. You're into over here. New day opening gap. Immediate rebalance. Oh, I do like 63.85 to 63.86. Just below you here. 63.85. If we close below 63.85, mean threshold, relative equal lows. It'd be a small little pop down in a quick little pop up and then a dive down for this. if I'm looking for lower. I've watched the Tibbs video so many times, I'm still trying to understand it fully. Yeah, it's a fractal thing. It really is. It works. I don't understand the math behind it. I didn't develop it through math. It was just I developed an algorithm or a little bot, and I sent it back through time, checking highs and lows, and it came back. And then when I made a spreadsheet of it, ran it through an analysis, and found very key points, especially at twos, like a 0-2, the 2 minute at every hour, huge impact point. Double zeros, the highs, twos, the 3, 4, 5s. And this is what you saw, Mark, on the 3 o'clock in London, the 2, 3 are the usual times that you'll see a turn. At 2 or 3 in the morning. You'll also see at 2 or 3 or 2 minutes after on every hour, 2 minutes. Then around 9:10, like 7, 9:10, you'll see a turn. Then at 11:12, you've got a small little, they're fighting for a high there. And then you don't have to wait till 16, 17, 18. There's each one of those is seeking a high. And if you line that up with a corresponding PD array, you can start to zero in on which one of those is going to be the most specific. It's really, really fine detail hunting it, and you really have to understand your PD arrays to work it with that tips. But just draw it down on any chart, you'll see that it works on everything. Anyway, let's get down into a 1 minute chart here. Looking for our premium box up here, and we've not quite tagged it yet. Morning, Derek. If you missed yesterday, you missed the Big D's call for lower prices. Great analysis, D. You're on this. You're spot on. Thank you, sir. Thank you. Thank you. So we're, for you guys, those all-time high callers, again, you guys are still looking for higher prices. Where are you looking for your turn point? Where would you look for on a 5, a 15, a 1 minute? Where would you look to see prices run higher? And where would be your target? The call was great. The timing from the market is frustrating. Overnight expansion in the right direction mean a large counter trade gap to trade initially. I missed it because I was looking for a price entry at 4-hour fair value gap above yesterday's price, but below fell out. The bottom fell out. Yeah, it looked promising until we saw that change in direction again. Hey, Derek? I think this was 3 o'clock in the morning, or where was the one here from yesterday? We were kind of looking at late last night. Or was it yesterday afternoon? On a 1 minute chart, you got this little consolidation area kind of bouncing back and forth inside this range. Look at this breaker right here. You want to see it trade below that breaker right here, trade it back up. Just missed it here. Missed this one at 470.9. So that's like a quarter of a handle, just shy of it here. Now for Michael, he usually says if you get a break below an old low, the first fair value gap you see, you can catch an institutional order flow entry drill right there for a continuation on the downside. So if you're really savvy about those first fair value gaps that occur when you take out a low and just a return into first entry point, which is that institutional order flow entry drill, a return to the old lows, which would be consequent encroachment in this case, or a full fill of that thing, supporting that. As long as you're supported inside the breaker, I'm good with that. But 1, 2, 3 levels for continuation. And then you get into your London session, or the end of your Asia session. And then you start running into, let's have a look at this. I don't want to rush too fast here. Go lower, change in direction. Body trades above it, take out that high. Takes out the high, look for change in direction right there. Trade back up inside it here, run it. It runs all the way through here, takes out the low. We have a volume imbalance, holds right on it, continues to go lower, finally trades back through it, takes out this high. You're coming back into this range now. I'd like to see a retest of this level and this level right here. You don't get it there, you pull back here. Did not take out that low. Change in direction, back here, ran out that high. Wicked all the way through here. Wow, very wicky. Through here, took out the high of that BSE right there, closed above it, took this high, ran all the way back up into this level we're looking for, 1, 2, here, rejected nicely off of that. So now you think we got to see this level right here. If we close through that, and there's a little BSE overlap here, so watch, see here, you trade all the way back inside. Right there is where you want to see it stop. You got a little piece down. Wait, that would be frustrating for me because I'd be like, okay, I wanted to see that go higher. Then all of a sudden you see it pop back through it on this candle. And great, now if we just retest this old candle here, it can go higher and you can literally catch it right there. Body traded above that candle, came back, tapped it, start moving higher. New high, market structure shift, come back to it, extend lower, take out the next level. You want to see it trade back into this main threshold. You don't want to see that main threshold give way. It worked through, then gave way and pulled back into this range. Right up to that premium level. Back inside this old low, this little swing low. Check out that level. It does come back inside it. Keeps coming lower. It starts to clean up a lot more on that 2100 level. And then we've had a big dive down from here. 3 o'clock. Mark's loving that 3 a.m. candle, hey? So let's put a little lipstick on this pig. Let's just add more lipstick to our little piggy here. We got another couple of minutes. There's the open. Where's her 8:30 candle? We can't forget Hadid's 8:30. There's lower. That takes out those. No, it doesn't take out those lows yet. We're still looking for 35. Looking for a push lower at 35. Morning, Russell. Have a great day, Derek. Take care, man. Hans. Hans is like, look at this regular trading hour gap. Wouldn't that be awesome to see that come back and refill that? So there's the relative equal lows taken there at 35. So I want to see a market structure shift. See how we just return back into this premium level right here? And then just reject it straight off that. So what I'd like to see this, take this candle, this little breaker right here. So this breaker, a little propulsion candle, and finally broke the lows, broke all the lows that we're looking for on the daily. Just coming back to retest this right now, and this starts going lower still. We're looking for those. I'm looking even deeper down into that 850 level. Okay, D's drawdown is first. So for me, it's got to break this little breaker up here. And this guy here to start going higher again. And what would you really trade into? You trade into 308 to 363. That's what I'd be looking for in there, 308 to 363. And still could go lower. So see how the bodies are, the wicks are bouncing inside this first SIBI here. So I want to see this breaker get taken to the upside. And the rest of that fair value gap fill in at 132. So far, there's no entry for here. You haven't had a body break here yet, except for here. And it's this big candle's running out this one, running out this one, and the breaker. If it runs all the way through them, the breaker is the key one you're looking for. None of this stuff down here right now. And you want to see this level up here give away. It hasn't run that out, so now this and this are still valid. Even this candle right here, nice little tap on that. If it continues to run out each one of these arrays, look for the last array to provide the support. There's the fill of the rest of that BISI above us, and this SIBI, still a couple of ticks there. But this is potential bull trap. So we want to see a body get above here and obviously above here as well. So they're so close together, wait for it to clear this out and use this as support to keep pushing higher. Head to E, grabbing a 15-second reversal. Man, right on the beezer. If you caught that right there, Hadi, ran that out, ran this out, you're still going higher. Your stop loss could be sitting right below here. You want to see that hold, all that hold. Now this thing here, just keep pushing higher. Good call, man. There, body's above it. You give it a tap now, away you go. So you're going higher. That's my upside objective. And that's another 150 handles ahead of you here. Give me a little tap there. I'll take two right there. How come it didn't go? It's just going to be one of those delayed entry things. I just clicked that. Oh, see, it did. And this delayed entry, hey? Stop loss will sit just one tick below that low there. Look at that. Even that's taking time to enter. Takes out that high. Pay yourself a portion at that high. We're hitting the premium box right here. I just saw that now. But that's the upside kind of push. So I don't see this. Sometimes it has this big drive down through all this. So the mean threshold now becomes important. If we run through that, we're looking for an attack on these down here again before pushing higher. So you watch how it acts here. You want to see it need a wick and start really going, not reattacking all this again. You just wanted to see that just come back into half that wick and start charging through that level. Because if we're inside this, that's the next trap level. And we're going to go through the mean threshold, and I don't want to take any more than that because then we're starting to come down into here again. Revisiting this. Let's just draw it down here so you can see it. Now I want to see it accelerate here. I don't want to see this bouncing around in here. I'm going to stick to my convictions. I don't want to see it get through that candle now. Yeah, there's the 5 minute there. I do like this regular trading hour gap. That'll put up to 463. That'll put me way past where I want to see it go. Where's 50%? Right there. So 75% fill, I think, of that. Let me see. Let me just take this regular trading hour gap and box it out here. I want to see if that's inside my zone. Quotas 75%. Just shy of 75. And it's above 50. Let's see. I'm with you, Hans, for a regular trading hour gap run anyway. So pay yourself one there. I'm just going to take one off here. Pay myself some cash. Move to break even. Because I don't want to see this candle hold. Pay yourself at that high. We've got a body above here. See how it's already come back through that level? And it's already into 1, 2, 3 levels in this candle. So I think we might have another run lower. That's taking me out there. So at least we got paid a little bit up there. The mean threshold been hit. That rolls over and keeps going higher. I'm okay with that. Remember, your ass would be sitting down here if you decided to go beneath that stop loss where it was. In other words, I wouldn't want to see this get revisited. It's already been broken above, came back, you hit it. It was kind of a deep run back into that BISI. And then run higher, took out the highs, pay yourself. Now this mean threshold's been drilled on. We pop through here, look for a retest of these two down here. Once this mean threshold gives way. So just be careful. Keep your eyes on it. The 15-minute, you want to see this 15-minute close above here, above 159. And the 5-minute, you want to see it come back and revisit this old high here. So many times we're drilling into that mean threshold. Look at that, 1, 2, 3. Now we're slowly starting to get through it a bit more. Drill bit. Right? What is the 8:30 candle rule today? Well, the 8:30 candle is right here, and it says, according to Hadid's rule, if that's a down close candle, we're probably going lower for the day. So you want to see it take out the highs, the lows, come back to it, tap it, and keep going lower. So you'd want to see these highs get taken. I think you'd have to ask Hadid specifically, but see those relative highs get taken, drop down, take out whatever low is below it, trace back into it, and go high and go lower. So we're right into the mean threshold of this little candle right here. I think this one's buried inside this one, so I'm still looking for this level to hold. All those drills through the mean threshold there. That holds. You could use, again, you're going to use the whole candle, but the mean threshold's by a little line in the sand there. So what I want to see now is to see it pop up back up above here for me to get back in sync with this to continue pushing for regular trading hour gap again. Good. So now on the next level, I want to see support price. Be right off that 25% of that wick on the monthly. Buy one there. I don't know why there's such a delay in this. Eventually it's going to pop in there. I'll take another one there. Look for a run, because again, if it gets back through here, we have a little change in direction right there. Taking out that high, we're running back, get above it. I'm out. I don't like that change. I'm going to wait. Right back into this candle again. See, that's just, suddenly it's getting choppy on me. That's good. And I'll come back and use this candle. There. Take one more there. And take profit's going to be right up in here. See if I can just leave this alone now and start looking at that 6 a.m. candle. I like the 6 a.m. And you got these other big objectives way up here and this relative equal highs above us. If we can get through this level and find support at that at 368, then I'm not bearish anymore. We've hit our downside objectives, those equal lows. And I'm looking for these equal highs above us and 448 to 470 up in this level. Just make that a risk-free trade now. I don't want to see this level get closed below. So it's a zero stress trade now. Just let it run. Now, Hans would be looking for 50% of this, which is $286. 286 would put us at that 6 a.m. candle again. Now you want to see institutional order flow entry drill. No more than 50% graded response here. There's an institutional order flow entry drill. Okay, stopping green. That was not fun. It's all fun, Craig. It's all fun, man. So on a 5-minute chart, see how we have closed above this high. We came back, we tapped the high, went higher, took out the little candle to the left right there, ran above it, didn't come back and tap it, just kept driving. You got this fair value gap SIBI right here. Now if we can get through this level and get up on top of this, use this as support. Don't worry about all this down here. Just look at this level as holding and this as support as well to keep pushing for your next little breaker here. I'd be looking right there at 295 to 310. So that puts me right back up into this area here again. I'm going to stop moving my stop loss now. I don't want to see more than consequent encroachment of this get taken out now. Suppose we could come back and retest this. If it's aggressive going higher, you shouldn't see this consequent encroachment fill. What are you in there? Our little Sibby way down yonder, right here. And we want you to see this level right here. Go back, you'll hear me talk about this level right there. And if I just take this and extend it out, you'll see, boop, right there. That's the lowest discount box. And now you go down to the lower time frames and look for a reversal there. So let's go down to the lower time frames. Look for a 15-minute reversal off of here. You probably have to get down to the 15-second again. There's the 1 minute off that level. Here's your first little Sibby. Let me just turn that off for a second. Wait for body to break above there. It does. Then you want to see this candle to the left get taken out. Let me just stretch this out so you can see it a bit more. You want to see this candle to the left get taken. It does. Does not come back and refill it. So you look for these two candles. You don't get in on that. Next one. You don't get in on that. Look for the next one. Finally, you have a break above here. You want to see it come back and tap it. If that doesn't give it to you, there's not a lot of opportunities to get long on that. Go down to a 15-second chart where Hidi caught his reversal. And there's lots of opportunities here. Small little imbalance. You ran above it, ran below, didn't take out the low, ran above, came back and tapped it one time there. Look for this order block to get broken on the upside. It does. Come back, fill it. Ran higher, took out the mean threshold. That's where I go. You've got to get back to consolidation. You know what? You want to see CAMP model 1 at the high, and a mean threshold would be CAMP model 2. So there's one, went higher, took out a high, change in direction right there. Back into the consolidation, change, broke above that high, came back into the mean threshold of that candle. And then that's usually the cleanest one would have been right there after 9 o'clock. 950 macro is 950 right there. Come back into this candle, go higher. As soon as it takes that high out, this high out, then you're back into looking for this little fella right here, 6049, 6049, ran above it, came back into it. This little guy right here, came back into it. Now we're going higher. Watch this change in direction and the market structure shift right here. Let me get back over to my candles. Make sure they're still being supported. So here's your range. You don't want to see this candle get broken to the downside. This consolidation, CAM model 1, 2 is a fill of this, and you don't want to see anything get lower than that. 6410. I'll put a line on there just so you see if we get below this line right here. And I'm spitballing this one. You get below that line. When we start closing below here, we're coming back into that range again. Oily oil, change of direction, come back inside. Bodies respect that level nicely. Wick did a bit of damage. that the bodies are respecting this. Ran higher, took out these highs. You want to see this mean threshold hold price. See how it came down and just banged around on it. Then this is where you watch it very carefully. You go, I don't like the way this is acting off of this mean threshold with this little breaker right here. What about this one? He's buried inside all this here. So I would take right there. You come inside, we're drilling away, and all of a sudden you see it bust right through it. Look for those lower discount levels that we talked about. If you don't get a chance to catch them, which you did here, then a revisit. You're right into the bodies respecting this one right here. Wait for a break above here and here. We have a break above that one, comes back into this candle, pushes higher, looking for this premium level up here now. So I'm looking for that to reach up into here. And you wait for this 1 minute first presentation fair value gap to hold price. Bust through there. If you can get through the mean threshold of this and get on top of that, look for higher prices in oil. Oh, Delali. Now looking for 301. I'm going to move my stop loss into here. And I've moved that twice now. It's still not moving. There's 50% of the regular trading hour gap. Morning, Ali. Nice 8:30 setup. Filling the regular trading hour gap. Okay, midnight price now. This is good. I'm going to pay myself at that level. This response to TradingView today is shit. I just said I'm going to pay myself, and it's really, really delayed. So we've got this, but I want to see a breakthrough here now. So this is a take profit model 3 now. So if I see a market structure shift along with this break-in, this BSI is broken to the downside, it'll take me out. Oh, it did finally give me a piece off there. It's already come through it. That'll take me out there now. I don't know why it's still dicking around there. Okay, now it's finally out. Okay, so now I'm looking for this to hold price and come lower now. So 50% of that regular trading hour gap, tapped it perfectly, and now we're getting a reaction off of it. So you got to pay yourself at a key level there. And our next little bull trap is going to hold consolidation. We did not break through the consolidation. So I'm waiting for this to get back through here, get back in sync, and then run higher again. There's the retap of the premium or the BSI. We'll wait and see if that closes above 244. That's a short. If it takes out that low, break even, pay yourself. Rejection block, pay yourself. They're close enough, just pay yourself there. Move your stop loss to break even. You're in a zero stress trade for a short right now. If it comes back and takes you out, you got a little piece out of that. Wait for it to get back above here, get back in sync with it going higher. If it's going shorter, like right there, that's a pay. Your break even, your zero stress, you've paid yourself, and now we want to see if this keeps coming lower now. We could get a retest of 238 maybe. Keep coming. And down you go. So then if you're pulling your fib tool in here, low to high, 50%, pay yourself portion there. If you haven't already moved to break even, move to break even. Half your trade can be off here, and you're just looking for a internal range of liquidity. And so if you're sitting at break even right here where we called it, and you took half your trade off here, what we're looking for is a 62%. The 238 is all I'd want to see that come back to. The fact that we're through this candle is nice. Mean threshold. I wouldn't want to see the mean threshold get broken. Okay, so watch 62. As soon as you hit 62, take 10% off and move your stop loss to 50. It's just internal range liquidity and inside here. That's all it is. Now this would be nice to see this start acting like a new price leg to go higher. That would put us right back up into filling this regular trading over gap here. But I don't want to see us get through here. So if you're still short, you don't want to see that level get taken. This simple retracement into a discount, that's all you need for that to keep going higher. There's a small little change in direction right there. You see it? Above it now. As soon as it comes down into here, if you're doing a take profit model 3, right there, out. Right there. Perfect. Out. Now you're done. You're taking half your trade off there, the rest of it's off here. Now you wait for market structure shift higher or lower. That's a take profit model 3. Change in direction, change of direction. So you wait for the next change of direction, which was right there. Trades back into it, you're out. Let's take profit model 3. Now you're below that level again. That's all you want to see is just tap this and start coming lower. So now we switched up. You're still inside this busy. We'll see that come lower now into 60, 61. If we're below this level again now, you're into it, come lower. And all this stuff that happens after the fact, after you're out of your trade, if you start getting all pissed off because it took off on you, you're not trading your model. And you got a liquidity, you got some money out of that, and now you wait for something cleaner to set up. We're just staying on the horse here, that's all. Switches back through here, then you're into that consolidation and a lot of chop. And you don't want to be played inside that. It's got to start accelerating through here now. If you're still on a take profit model 1, you're still in this, you're still inside this. Your break even, 50%, half your trades off. As soon as that hits 62%, you'll take another 10% and move your stop loss to here. Come on down. This is on a 9-10 turn as well. So you're expecting that to be the low, 11-12 to be up in here. This is tips here now. 11, 12 could make a turn, and then you're looking for 16, 17, 18 to get back down into here. Unless we break through this level here. So if you're looking for a 9-10 and you're saying, I'd like to see this fill in a 9-10 turn, then there's your 9-10, there's your fill, there's your 11-12. So if we start closing below this open here, and the mean threshold, to look for 12 to do a little pop below this or run above here. I'd like to see it keep coming really. Back inside here, there's the 12, new high. Look for retesting here at 238. So if you're looking for a 12 Tibbs, you're looking for this to hold at 12. And then 13, you want to see a 13 candle start to come back down. That's why you use Tibbs to line up with specific arrays. Now if 12 gets through this, I'd expect to see 13, 14 push higher. So there's your 12 inside the BISI, 13 coming lower. Now I don't want to see 13 take out that high. If it does, then we're looking for 16, 17, 18 to continue. This is a continuation. I expect to see this get taken on the upside now. Mean threshold. See where the 9-10 closes. 5, 4, 3. Totally not. 12 did not give me the high. Kept us inside the BISI. Did not go higher. So now we're going to see this continue getting lower here now. Got a change in direction right there. Our little imbalance, volume imbalance. Come back, tap that. So 15, 16, and we're going to go lower now. There's the tap. We start eating through the mean threshold of this candle again. Get back to this busy. Let's go these, need a little more gap up, fill, equal highs too. Did you take a crude oil trade below 830 price? No, I did not take it 830. So you want to see a body get through here? It does, then you get that little premium level right there. So because that's so close to the premium level, you want to see the premium break in this mean threshold. So you want to see it get above here before going higher. Otherwise, you're jumping in on a premium and looking for this to hold and take that. And all it needs to do is run to that premium level right there, and it's done that. And the body's held on it. You popped up into the mean threshold of that candle. And now you've got to, if we start to see a run through this low, look for this candle to provide support to come back into this immediate rebalance down here at 64.76 in this candle here. So you're right back into that first presentation fair value gap on the 1 minute in oil. We're bouncing off of it. You want to see this start to climb up through this level, take that out, and then use that for me as support to potentially enter in for a long. Right now it's just too choppy. What's Bitcoin up to? Complete fill of the busy, but I do want to see it come back, at least tap this old high here. And then start marching higher, looking for one, two, three. Gold reaching for their upside objectives. Placed, found support at this. Look for this high to get taken now. So we're looking for a rejection block. Hold high. See how it's found support off that level. Tapped it. Starts pushing through the mean threshold here. Look for rejection block. Hold high and maybe looking somewhere inside. There next. So you got 62%. Pay yourself here. Move to 50. And it's come back right there and taking you out. So if you're into your internal range liquidity hunt here using the take profit model 1. And you got there, choppy, but you got there. Would have been a good squeeze on your entry. Came back, hit your 62, took you out at 50%. So now I'll gotta wait for market structure break here. This is 16, 17, 18. So there's your 16 swing low. 17, 18, here's the squabblers. Now you're looking for 2021 to make a high. This is 19. So looking for 2021 to create a swing point. So with these candles, you see this. If you want this to go lower, it's taking out the lows, it's taking out the highs. Now, if you see this come back through this, tap it, you want to see it start running for discount and then further down if you're looking for his setup. Traditionally, you'd see that go higher first, then lower, then back to it, and continue coming lower. So let's see where 21 candle takes us. You're looking for 12, 830. 112, 830. This, you want to see that stay there on the hourly. I'd like to see that fair value cap stay above this level and then just give you an institutional order flow tap or just a continuation straight up. Graded response for A plus is just continuation. So you'd look for anything that doesn't sweep that low, looking for that continuation on lower time frames to go higher on the next hour, that is. Here's your 21. See if that breaks above this level here now on a close. Look at that, look right on that, tap it, now keep coming higher. I'm going to go along there. It's just barely made it over. So if we start closing below this level again, it's too much chop for me. I won't enter any more trades until I see it starting to clean up a bit more. So I'm going to go to the mean threshold, just below the mean threshold, like this candle here. And I want to see that start climbing higher now. I've only got one on here, so mean threshold, pay yourself a rejection block, move to break even, stress free. Now it's got, with intention, it's going to leave here now. See this waffling around here? Not what you want to see. Tap it, let's go. See if you hit your rejection block, pay yourself, stress free, come back, take you out. And now you're like, okay, it's too choppy for me. There's a small little imbalance right here. I'm going to watch where that closes now. I'm out there. It's close below it. Coming lower. Now it's too choppy. I'm going to leave it alone for a while till I see something cleaner. It didn't quite hit the box I'm looking for. 307. Look for retest in this first presentation again. We traded below it. We traded back into it. Come lower. I want to see market structure shift here and use this candle as support to come lower. Like if this is the only retrace we're going to get in this whole range on the hourly or 15-minute, that's right up to 79%, a little bit higher, projected off there. Next 2 minutes, we'll see what happens off of this here. Not short yet, Russell, till we break that structure. And you want to see a nice displacement below there, not just a little body barely getting through it. Otherwise, we end up. You want to say, hey, look, my intention is to go lower. I want to see a big pop through here. Create a fair value gap. Ideally, would be like create a fair value gap here, institutional order flow entry drill, and keep going without even coming back and tapping that. Just roll over and go. Or you look for this to be 50% of the candle that is created in a BISI down here, or sorry, a SIBI. See that as a 50% mark. So this would have to be a big bold candle getting down here, create a little SIBI right there, and that would be 50% of it. Where would that put us? So we'd have to get back to this 25% line on the monthly wick. We've got below this level. We're retesting this level right here, this BISI. We have not broken below a low. There's no swing in here. So this level, we expect to see that hold and come lower. This little line in the sand would be right there, and we don't want to see this close here. So I want to see this keep pushing lower. Now it's a 27 candle. It'll swing high. So now that I want to see hold price right here and keep pushing it lower. If we start getting 30, 32 up in the air, back into sloppy. Yeah, you're bouncing right off that 15-minute fair value at first presentation. So yeah, start ripping it. Watch, it's got to clear out this level here. Your next bull trap right there. Right at that level I'm looking for. Your 15 minutes giving you a nice little continuation to the upside. Again, you're paying a premium right now, even in a 15-minute chart, to get above this candle. Because if this holds and all you've done is just run up into here, you've paid a premium to get something that you have got to run. above that last candle to the left. Got to get a body above that. Use it for support. Leverage that to go higher. So we got mean threshold of this candle. You're above this level again now. And we're now above that level, that premium. So now you want to see this body close up above here. Stay on the horse. Don't sweat the fact that it didn't come down lower. Stay on the horse and watch the change of direction. I didn't want to see this get broken because we hadn't taken a swing here. But now we're the mean threshold, so obviously holding here. That's a nice little punch up. Good. Come back down. You can get long on that. And one there. Now I don't want to see this and then this get filled. So the stop loss will put just below this low. I don't want to see this get filled. So this little breaker, well, not a breaker, mitigation block that did not take out these lows, that's got to mitigate off of there and continue going higher. And again, it's choppy. So, and we're through the mean threshold of this one again, so you're reaching for this one or this. That mean threshold sliced right through. So revisit, deep revisit it here. Now I want to see it get back above here and use this candle here as acceleration. Inside your 15-minute candle, you've got a revisit at this. So we broke above your 15-minute. We've come back inside it, found perfect support inside the first presentation, fair value gap on a 15-minute chart. And you see a SIBI being revisited, push higher. You want to see this right there on the body at 231. Hold. You've got a body above this high here now. You don't want to see this candle give way. So that's like right to here. See what kind of reaction you get here. You want to see it really snap off of here now and start driving higher. As soon as it takes that high, go to break even. And look for the rest of this. And more of our first, our regular trading hour gap. Just to go higher. That's what you want to see. Bounce. Keep moving. Yeah, I agree with you, Hadi. And this is a lot of chop going on here now. I want to see this close above here one more time. This, see how we're getting this wick, and it's it's kind of just chopping off here. It's really going to start accelerating to get out of here. It's holding on. Let's sit there and see what we get. It's sitting. Yeah. 318 to 345. 318 to 345. Yeah. It tells me it wants to get back up here. 318 to 345. It's all inside this box here. $232. Just give me a projection block again. 261, 262. See it bounce over here, which is almost at mean threshold. It's been broken to the upside. We've come back, revisited the mean threshold. I want to see that start pushing higher now, not waffling around inside here. You see it just leave from here. Mean threshold. That candle is validated. Now all of a sudden we're dropping below it. Not a good sign. We've got a small little change of direction right here. Below it, above it, below it. That's a lot of chop, man. So now if we see it close below here, we're definitely on the wrong side. See how we've got the little structure change here? Come back, tap this. And if we start to revisit this, I'll close that out and look for the loss. It's me out. So now you gotta wait for a structure break. There's the chop. You get beat up and chop, you guys. It came down, just tapped it. Let's see if we start eating through it now. Agreed, Russell. Too much. Wait for a structure change now. So you're through that main threshold again. Revisit here or even way down here. And if you close below here, then forget this noise. This bull trap holds you. Next one, next one, next one. Holds you. And then if we send this through this 42 on a close, then there's your first indication right there. We just started closing just a little below it. We've come back up inside it, looking for a low now. Looking for that to push lower. See if we can get through this 199. See, we got an overlap here. This one and this one. We finally broke through this one. Find support. Keep coming. Take this mean threshold and this low. Get support off this candle. Let's see if we start to bust through this mean thread. This first presentation on the 15-minute. 178. You want to see this big down candle here. Two minutes, you want to see that close below here. And then you're back inside this range looking for this discount on a 15-minute here. Bodies below it. I was kind of hoping we would get back to this. This could be tomorrow's retest. We stay below here and we close down in here, keep this relative equal lows. There, that's an equal now. That all we do is just kind of waffle around in here for the rest of the day. And then tomorrow come back into this, tap it and come lower. I was kind of hoping that we'd get there sooner. But that's fine. If we have a body close below that, I'm cool with that on a daily. And then if we trace back into this with a wick tomorrow, I look for London or New York open to kind of get us into this 3 a.m. candle to start driving us back down for these equal lows. Unless this really accelerates today, then we're looking for these next relative equal lows below us here, and this mean threshold of this candle here again getting revisited. Okay, there's the retest. Institutional order flow entry drill, keep coming lower. Just going to close below here. On a 15-minute chart. See that 50% of that regular trading hour gap is all it got traded to. Now we're starting to see a little break in structure down here. You get a retest back up into half that wick, 196. Put you right in the consequent encroachment of this too. All the way up into a full fill of this and go lower. You gotta retest that low there. Keep coming lower. Looking for this little civvy down here. You took this swing low, good for you. You caught that nice little swing. Now you gotta want to just settle into it now, Russell. You want to see this mean threshold give way here now. So you don't want to see a revisit back in here multiple times. I still think we could come back into 196. But this way you want to see this mean threshold give way, and then if it does and takes this out, then this candle becomes your support. So just settle into it, get into zero stress, and just sit and watch, and just look for these key levels that you want to see give way, and either pick your model for your take profit, or and stick to it, stick to the rules of that particular take profit model, or just aim for box to box trade. This level right here, you trade it below it, that's your box to box down here. You got first one, second one, third one, and just leave it and let it and trust that it's going to get there. If you got in at this short, move your stop loss to break even and just trust that it's going to get down here. If it doesn't, if it comes back against you, then you're break even. You get to learn something from the trade. You say, what kind of resistance do we see? What kind of expectations can I have on price action based on it coming back against me? What level held price? Why did it come back against me? And just kind of analyze it now. Once you're in a break-even state, clear your mind and just wait for your discount boxes to get hit. And you'll find yourself not getting so stressed out over your trades anymore. You'll see when they're going to change direction on you. And you'll get a little more comfortable with it. So if it takes there, pay yourself a portion there. So now you've got a little money in your pocket, you're break even, and now you're still got a continuation on the downside. If you've only got one on there, move to the cost, pay yourself for the cost of the trade, and wait. Just keep waiting for your objective, your trade model to be reached. Oh, you're out already. Okay. So now you're going to look at this Russell and say to yourself, why did you get out? If you just look at, if that's your objective and not this, and your model is, hey, look, man, I'm trading the rejection block in and out. Nothing wrong with that. I'm trading to internal range liquidity, 50%, 62%, whatever. Your internal liquidity hunt trade model 1 would be from here to here, and there's 50% right there. So you pay yourself, half your trade is off right there. You're at break even, and now you're sitting here waiting to collect more money down here. Okay, so you're 50%. It's a zero stress trade. Half your money is already in your pocket, paid, and you're not going to take any loss on that. So you're just hunting internal range liquidity. If you can get through this, then you're looking for external range liquidity. So just kind of sit on it right now and watch. And you see how we broke through the mean threshold of this candle right here. We came back inside it right here, and it pushed lower, hit the lows. Now you want to see it break through here. Body broke below it now. Come back, give it a little tap. I'll even go short there. And I'm hunting for this last little piece right here. One, we'll go full consequent encroachment of this guy here. So I don't want to see us get back through the 830 candle now. So if this is, you've gone lower, higher, you've traded through the 830, you've come back to 830. If you're using a D's setup and you want this to go lower, you're going short right from that 830 candle. And I know it's not exactly as the D would have wanted it. He would have wanted it to go higher first, then lower, tap it, then come lower. It seems like the markets are constantly, and I want to be above here. I don't want to see it get back through this candle. I'll even put another one there. Off 830. $196, don't forget. If we do a sudden burst back up to 196, I'm going to put that above 196. I'm going to go right there. That'll eat up all the profits I made this morning if it comes back against me. So this breaker's got to hold. This little guy here on the 15-minute chart's got to hold. That fair value gap's got to hold for me to come lower. See, now this is where you can argue. Come back down into this level, you expect it to go higher now. If you retap this busy here, you want to see that go higher. So I don't want to see it get through this candle here. If it breaks through the mean threshold of that candle and above that 830 again, There's an immediate rebalance here. That small little area right there. Watch, see if this comes back and finds support in this area and keeps starting to eat through this mean threshold here. I want to see this leg create the next price leg lower. This one here. Push lower. Just trust my CPs is all I'm going to do here. What time frame are you on there, Ollie? Of the 9:30, this first presentation fair value yet? Is what you're looking for? It's bouncing right off this mean threshold again. An old Bissy premium. It's got back through that. And it's bouncing off of there again. See how it's run through it, hit it, hit it, hit it, hit it. I'll be right back. Trail at that point, but we should make external range. Don't sweat it. Have your rate rationale and your levels. If I eat through here, then I'm looking for 50% of this. 196 again. This could come all the way up to 180. Right there. I want to see some sensitivity there. You already threw back through this mean threshold here, so 180 is it now. Get back through this level. Kind of bouncing off these two levels now. You see a heavy drive through here. Take this out. If this is cleaning up, I expect to see a tap. Eat through this mean threshold. Send it lower. It's good. See, this candle provides support now, all the way up to 156. Just give it a little tap and keep coming. So the 5-minute chart uses a discount down there on the 5-minute. There's rejections. Give myself one there. Problem is we can just, I'm going to put this one right here. Let's see, come over now. That's good. Good big drive down here now. Let's get into this level. Pay myself if there's rejection block here. And then we can see, I want to see it close on 15-minute chart below this level. Find support at it, come in here. I just don't want to see it tap this candle's high where it's open and then reject off that and start coming back up into here. So I want to see it close below this civvy here. These equal lows taken out and not start running back through this level. That's why my stop loss is tighter now. These retaps, fine by me, just keep coming lower. Like their individual price leg, the next price leg lower from here to here, reaching into a discount box down here. If it starts to run back through this level, you start to go, there's a potential for just a run on liquidity here. Small little civvies, if we start to get back through them and get back through this, there's a tiny imbalance sitting right in here. Then you're looking for thresholds and another run higher. So right now I'm just kind of watching. See how we act off this candle. There's a tab at the bottom of it. Keep coming lower now. I'll take my money and move to the side. Let's see if that keeps coming lower. So up to the main threshold of this, I just don't like this whole constantly keep coming back stuff. So not sharp, not clean enough for me. So I had to endure this and say, oh, that 180, that retap of this fair value gap was my like line in the sand. To see this hold, the mean threshold already broke through it. So I don't like that. So what's my last ditch effort to hold this right there at that 180 level? It held. broke that level, great. As you want to see this get support, where this level gets support, it did. Now it's starting to chip into it some more. That candle's got to hold, so it's got to roll over here and not come lower. You start to continue to wick into it like that. That's just not acting the way I want it to act for the last 3 minutes. So that's it. If it goes lower, it goes lower. Ollie's got more patience than I have and more trust. I want what you want, Ollie. Let's see a drive now. I want to see it get down into here. These discount boxes. Just to make a point. It's got to break here, Russell, for you to start worrying about that not making it there. Back into this order block again. So it's mean threshold. There's a little imbalance right there. Now you want to see this really start ripping through here. Retest, immediate rebalance, all the way up into here. All this is fair game for me. Retests right to there. There to there. Come on, let's just rip it down now, Ollie. Push this into the mean threshold of this candle. Let's go, Ollie. Let's get what you need, buddy. The 111.11 candle. That's where you're sitting right now. Yeah, don't blame you. Take out the lows. This is when it starts to get choppy and you go, oh, geez. Welcome to the Monday after, or the Tuesday after the long weekend. There, next 15 minutes starts, come back up, gives us a kiss at 145. Hit this level one more time. Let's come to Look at all these little levels. If we can get back up and just kiss into here, 145 to 147, and see that roll over. That would be a retest of the 15-minute change of direction. Come back, tap it all the way up to 156. Right? And then roll over and come lower. Who can do it? Says it's heading there right away. There's your first one, second one, third one. Box to first box, second box. Second box is right. Give it a little poke, a little tap. Just shy of that. It is tapping off your first presentation for value gap. You've already hit your first pay dirt for box to box. I want to see it come back and give this little tap. There's the second box to box. Now just give me the third box to box. Come on. Just give me that last level right there. And then we'll see if we can get our way through that. Second one's been eaten through. Mean threshold. Here's the mean threshold. $18, so 19 to 21 you want to see start digging into here. If 20, 21 holds in this order block here, this goes 20, 21 gives you a little swing high and then pushes lower. Look for the 27, 30, 32 in here. 32 is the bottom of the hour, right at the very discount portion of the range. If we start to eat through this, the crazy Ivan, like we do 32, then the crazy Ivan starts to come back. He doesn't see you and continues going lower. That'd be like the crazy classic bottom of the hour, crazy Ivan. Look back over your shoulder inside this range. Doesn't see you, rolls over, comes back, tap, continue going lower. That's what I'd be looking for in the TIBs. If you're looking for TIBs numbers, there's 19. $17, $18, $19. See if we can push 20, 22, 21 down in here. Just give me my last box. That's all I want to see. Thanks, D. Good technical calling. You're welcome. So this mean threshold is holding price right now. So again, if you want to see this go higher, you want to see a market structure shift above here, and then the next bull trap above here. So you're looking for a candle to the left, this one, to give way, then this one, to give way, then this one, to give way. That's fine, keep pushing. There's the 21, run higher. Now let's go push, push. I want that 21 to stay right there. I don't want to see a 22, 23 going up there. I want to see 21 to 27 now. Start pushing lower. Nice work there, Ollie. Good work, man. I want to see this mean threshold pop through here now. Now we're going to see that first presentation, fair value gap, get worked. I'll see it drop below here, come back, use it to continue to leverage lower. I don't want to see that 21 level get taken to the upside. 21 to 27, the next 6 minutes, you want to see that go straight down, or at least head down some more. Half that wick, it's already through half the wick. There's a little sibby right here. There's the retest of it. At 111. 114 is your high. 111 is the very bottom of that. Great calls. That's enough for Tuesday. See you all. See you later, Ollie. Don't want to see that. You're already above 21 there. You're inside 14. No bodies above here yet, so we'll wait and see if we get through here. This mean threshold still holding price 0.96. So we're between this mean threshold and this mean threshold. So inside this range, that candle is your first bull trap. You want to see it hold, keep coming lower. We're back to the open. Let's see if that holds. If we eat through 1, 2, 3 on a close, then I'm going higher. No body above here yet. Whew. Kevin, you're on ES, I would imagine, those numbers. What are you looking for? 63.76. Yeah, it's too choppy for me, man. You got to get above, they got to break out of this level, so you got to get above 30 or 63.89 on a close. And then you're looking for this up here. This level here and that level there, not too far from an overlap, and you're already in the premium, so you got to pop up like that. Pop up, get above here. And you were looking for 64.16. That's good. Close above, good. Now give it a tap. Now you want to see that run. 64.16. That's a good call there, Kevin. If you took that off that high, I'm all for that, man. Give that a run right there. I'll even buy that one as a long. And then you put that stop loss just below here. I'm going to see that hold right there. Above it. Tap it. And I'll start running. And I'd look for profit right up in there. Partial here, here, and here. Tap that. Sorry, that fair value gap. You don't want to see that go any lower than that. So I'm going to sit right there. It did not work. The bodies are still below here though. I may have been my stop loss might have been too tight. You always drop below here, there. It's still go lower. It's got to get back above there from this breaker. And either you look at that again. So look at what these guys do here. Look at that. I want to see it get into here. 143. Yes. I like that right there. Switch it up. Switch it up. Break this here. No. You got a structure break, structure break. here, tap this, come lower, take this out, we're going lower, and then going higher. It's got to get through this level right there now at 63.85. I was all with you there for a moment, Kevin, until you got the turn to get up this level here. Market structure shift, shift, tap here. You got to see if that you want that to hold, it's got to hold in here, and it's already wicking through it. So got to turn around and start hitting higher, but I'm not interested until it gets above that guy there. I just want to see this guy here hit my discount box so I can call it a day. See you later, Hadid. You're welcome, buddy. See you all tomorrow. Tomorrow I won't be here tomorrow, just so you guys know. I won't be here till Wednesday, or sorry, Thursday. I won't be here tomorrow. No show tomorrow. Just give me my level and then I'm closing her down. So you can see box to box trade right there. From there, 1, 2, 3, and you're done. If you can get through this level here on the downside, keep coming. I'm looking for 2365, 2380. Yeah, 2380 and 2365. So literally falling into my discount busy here. City. Just need 2 more handles. Let's go. Come on, just give it a kiss. And I'm done. Talk about TJ. So we're looking for it to break below this level. It did. Not to come back and tap it. Or just run here and give me my chance to strut around the house here. $89.5 right there. Disco dancing. Okay, so we hit it. So as you can see, there's nothing wrong with my box to box setup. What you saw from me doing is I move my stop loss and I chase and I worry over every little turn instead of just trusting my box to box trade. Right, and it's right at a key time of day, time and price. Like this would have been a nice little run to, look at a premium box right here. Even if you took the lowest one, it's 219. To look where it's at right now. So you're at 140 handles. You gotta trust it, man. And don't chase your stop loss all the time. But that's box to box. Now we want to see it run all the way through here. 219. We get all the way through 257. There's 257. That's the bottom of the box. If you see a reversal off of here, you have a great, or sorry, a perfect entry here with some wiggle. You have a level 1 and a level 2 entry to a level 1, level 2 exit, level 3 exit. If it pops through there, comes back and uses it again, you can get back in sync with it going lower and extending the range. That's the ideal way of doing it. And as you can see, even I wrestle with the holding and watching it come back and say, I don't like this. It's moving. It's not moving quick enough for me. If you just had the patience to hold on to it, you would have had a beautiful little run there. So there you go. That's the box to box, my friends. So you can see the psychology of how it messes with you, messes with me all the time. That 180 level, how it held, and now I see it coming through here. You go, gotta hold the trade longer. We'll get there, you guys. Even myself, you can see how I'm still wrestling with some of my own demons when it comes to trading. So that's the bottom of the box right there. So if you see it break market structure to the upside, and that middle of this wick is holding price, then we want to see a pullback, because I want to see tomorrow for us to run back into tomorrow I want to see us run back to 315. So if this is going to be like the low, I don't want to see this low get taken out. I want to see that stay intact and start breaking through here and start running up into these highs again, so that tomorrow we can just pop into that 312 to 364 level, clean out these highs, and then go lower. That's what I want to see anyway. Okay, that's it for me, you guys. I hope you had some fun today. Hope you saw some decent trades. I hope you saw some nice setups. And I will see you guys on the Telegram channel, and I will see you Thursday. All right. Anyway, thanks for tuning in, you guys. Subscribe and like if you liked what we did today. Hit the thumbs up button. It always helps our channel. And if you're new and you want to see a level of precision like this, by all means, subscribe. We're here for you every day, except for tomorrow. Okay, thanks for tuning in. See you guys on Thursday.